Good morning and welcome to Bazaar Morning Call. I am Anuj, with me, Prashant and Sonia. Today is a big day for the market. It's the expiry of the monthly contracts. The market, of course, has made a move already, but it will be interesting to see it because the cues this morning are more on the positive side. Like we've been discussing on closing bell, the markets dodged a bullet firmly now, and the 20-day moving average has held out. That is the bottom line for the market. And it's a ascending 20-day moving average, so the direction of the market is up. The average itself has been moving up. Globally, the dollar index has cooled from what could possibly be a double top. I mean, if that is the case, then emerging markets are set for a massive rally. But if, we'll wait for maybe 3 or 4 more days to find out if that is the case. Crude, of course, could act as a spoiler. It's back to 102. But let's see, the SGX Nifty is indicating a gap up. Guys, hi, good morning.
Hi, morning, Anuj. Morning, Prashant. I love it how every morning we wake up and we say today is an important day, you know.
It is. Every day is important.
Is it just our enthusiasm or is it genuinely an important day?
No, it is very important day, Sonia.
Like green on green that you're wearing, perhaps it's an indication that things would be, it would be a good day for the bulls. Well, the fingers crossed over there. But I mean, I take your point. You know, this 20-day moving average is something that has held out. 17,430 is the level. And every day the market has been seeing some buy on dips, whether it is intraday, whether it's in individual stocks, specific names in the large caps. But the flows have dried up, at least for yesterday. So there was hardly anything. About FIs bought about 23 crores, DIs sold 320 odd crores. A lot is happening globally. The US markets ended its 3-day losing streak, so ended in the green, which was very good for the bulls. All eyes will be on the Jackson Hole meeting. But apart from that as well, there's the jobless claims data that's due later today. There is the consumer spending data, personal spending data that's due tomorrow. Brent crude is on the rise. It's almost at $102 a barrel now. There are some concerns that US may not consider additional concessions to Iran, etc. So all of that put together is adding, that upside on Brent. But for our own markets, Anuj, the good part is that the dips are getting bought, whether it's intraday, whether it's intra-week. And do you think that could be a trend that could, move forward today as well? Yes, and before that, someone just, tweeted to me that, every day is important because, it's start of a new day. So, yeah. that way. But look, Sonia, the most important hour for the market is the last hour because that's when, if you leave your positions open, and last hour is about those who have the guts to keep their position open for next morning, not worried about the gap. So in that sense, the markets for last 2 days have been closing at the highest point of the day. I think that is very important. What the last few days has done is it's given us a very important line in sand, 17,345, which was the low that we hit 2 days back. And on that day was the 20-day moving average. It's moved up now, of course. But even then, 17,345 becomes important. I think why the market's looking bullish is because the bank nifty has got its mojo back. When the market leading sector starts to do well, bulls feel good about the market. Just to give you just to corroborate that, the Nifty this week is down 1%, almost 1%, but the Bank Nifty actually yesterday turned in the green for the week after leading the decline for the first 2 days of the week. So in that sense, it's important. Also, the overbought nature of the market is now down drastically. There are 3 or 4 points which are important here. Remember the Nifty RSI that we spoke about last week as well, which had gone to 83, has now cooled to 62, which is a very sharp correction in that momentum indicator. The other one is the FI long exposure, which had gone to almost 70-75%. It's come down to 45%. The put call ratio is down to below 1. So my sense is if 17,345 holds, then perhaps another exertion towards 18,000 is possible in the month of September. It would be a classical case of a market in an uptrend, taking a sharp knock, removing excesses, taking support at the 20-day moving average and moving on. This theory is negated if you start to close below 17,345, which is not the base case right now. But Prashant, hi morning, what do you have for us?
I mean, the rally overnight, and it's not a big rally or anything, but it was surprising, and I'll tell you why. So the S&P and the NASDAQ specifically was up a little bit more. It was up about 0.4%. But the reason I'm saying it was, especially the move in NASDAQ was surprising because, rates have moved up very sharply. I mean, government debt across US and Europe sold off quite a bit. So take a look at, and that's largely because inflation expectations are rising fast. So both rates and the volatility in the rates market is quite a bit. If you remember, just earlier this week, we were talking about how the US services PMI saw a very large miss. The front end of the US yield curve, the 2-year, sold off to about 3.25, right? I mean, that was a reaction after the services PMI sort of missed big time. It's back at 3.4, right? 3.25 to 3.4 and a day and a half flat. I mean, that is astounding. The 10-year, for example, in the US is now back at 3.1. But it's not just the US. You look at in Europe, basically, Germany, UK, other markets, but I'm going to talk about the larger ones. Expectations of central banks there have been repriced aggressively. So the UK 2-year is now near 2.9. The German 2-year went up almost 8 basis points to a nominal yield of 90 basis points. Remember, real yields are deeply in the negative still, which means the only way to bridge the gap is for sharper than expected rate increases in Europe as well. So that's the other point. Otherwise, I mean, you know, the two things which we need to be lower are slightly higher. So Brent oil is comfortably above $100 and dollar index, I mean, it's at about 108.90. There's resistance around 109.2, 109.5, but you need these lower, not higher. And I would still look at 17,745 as the initial level. It's nothing but a very near-term retracement. It's a 61.8% retracement of the recent 2-day fall, which was spread over last Friday and then this Monday. So that 61.8, the golden retracement is at 17,745. The question is, I mean, having said all of this, could India stand out? I mean, I was just thinking the RBL Bank, we were looking at the RBL Bank stock yesterday during closing hours and wondering what's going on. I mean, it was up 5-6%, then went up 10, then went up 15, and we'll talk more about that. There's a large long-only investor which has come in. Could India get outsized flows? And where? I mean, the only pushback to that is that valuations here are still are already, I mean, as someone pointed out, 100% premium to other emerging markets relative to our own valuations. We are at the top end. So that's the only kind of pushback to the view that irrespective of whatever happens, I mean, this is a solid growth story and we will get outsized flows as compared to other parts of the world. Sonia.
Actually, that's a view that's been corroborated by Jim Cramer of CNBC as well. I was watching his show and he did say that the bottom is in for Wall Street. At least that's what he believes, that the worst of all the negative news is sort of priced in, you know? I mean, in the increasing chatter that a lot of people are talking about. Well, in any case, there's lots happening on the markets in the next 2.5 hours. On the equities front, first up, Amish Shah of Bank of America Securities says that they remain cautious on the markets given recessionary concerns amid slowing global growth. While they see risks of further earnings cuts, this could be cushioned by a recent moderation in macro headwinds. That being said, Nifty's valuations at 20 times 1 year forward EPS appears elevated. MSCI India's valuation premium to emerging markets remains elevated at 82% and 36% to the world. They remain constructive on internal-facing domestic cyclicals, consumption, and underweight on external export-driven sectors like materials and IT, while they are quite neutral on discretionary stocks. So, I guess underweight on IT seems to be the common theme now.
Yes, that is. And let's now also get you some money market calls. First up on rupee, we have Parul Mittal Sinha of Standard Chartered Bank saying that the USD INR has been trading in a narrow range despite the dollar clocking fresh 20-year highs ahead of the Jackson Hole summit and oil prices back at $100 per barrel. She says the US dollar sales by PSU banks and sustained FPI inflows have helped offset forex losses. She expects the USD INR to trade in a range of 79.50 to 80.25 for this week. Actually, that's a very valid point. The INR has been quite resilient in face of all the negative news.
Okay, and on the bonds, Parul says that Indian bonds have played in a range in line with the global rates with some support on renewed hopes around index inclusion. She expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.35%. In the near term, the outcome of the Jackson Hole summit and oil price trends are likely to provide some direction to the rates market. Okay, so that's the view. Now, today we have lots of stock-specific action to track, so we'll get to that in just a while from now in our special top 10 segment. So we're looking at names like Bharti Airtel, RBL, ONGC, Oil India, PSP Projects, Eris Life Sciences, Torrent Pharma, NHPC, Omax that are on the radar on the back of positive news flow. Lupin is the only one that's likely to perhaps open in the red. So, well, those are some stocks to look forward to.
All right, so as we look ahead, the big event, of course, is the 2-day Jackson Hole Symposium. Let's listen to some opinion which we got from, Naveen Saira Malik and Rockefeller International's Ruchesh Sharma on what we should expect. I mean, are risks leaning towards the hawkish side, or are these dovish now with the market having corrected quite a bit? Listen in.
Going into Jackson Hole this week, we think there'll be two key messages. One will be slowing rate of interest rate increases, but we don't see the Fed giving out a timeline for the pivot. That's because even though headline inflation is peaked, there's a lot of sticky components of core inflation like wages and rent, and that's going to make it challenging for the Fed to give out a timeline for where they may pivot and cut interest rates. So we aren't surprised to see the market selling off after the July rally, which was based on the hopes of a Fed pivot in early 2023.
I think that if you look at emerging markets, there are about 150 developing countries out there. So I think that the Fed's decision has a different impact on different markets. But clearly the most vulnerable to me is China, because, we've spoken so much about inflation and how inflation is rising everywhere. But one country that is still suffering from possible deflation is China. Their ability to stimulate and cut interest rates is going to be constrained by the fact that the Fed is increasing interest rates because that accelerates capital outflows from China. They don't want a repeat of that. The currency has already depreciated around 7% or so this year.
All right, so that's basically Ruchir Sharma with views there. It's an important event right up. Our global guest is now ready with us to provide us with an overview of how things may look. Phuc Hein Yap is Senior Investment Strategist at Standard Chartered. He's joining us to take some questions. Mr. Yap, great to have you with us here. Thank you very much. I hope I got the name right. Feel free to correct me if I did not. What is your sense in terms of...
That's fine.
How are you looking at things, Mr. Yap, in terms of where we are? I mean, we've seen very large moves in the rates market in the US, in Europe as well, particularly in Europe last night. Because they seem to be repricing what central banks will do. I mean, this is a repeat of what we've seen earlier. Things cooled off, and now we are kind of getting back on that once again. Will that hit risk markets, in your opinion, or it's an old story now?
Yeah, I think I've been listening to what you were saying, your show, for the last couple of minutes, and Jackson Hole has come up quite a bit. I think, not unlike others, Jackson Hole is a very key event for us. I mean, I'll talk about Jackson Hole a bit, and I come on to Europe, which you're talking about. So Jackson Hole, I think, it's been a big driver, but I think, the Chair Powell is probably going to reiterate what a lot of the other officials have been saying. That they are very committed to fighting inflation. They do not see the US in a recession yet at the moment, but inflation has to come down, and therefore they are very committed to that. Bear in mind, though, the Fed meeting is in September, next month, on the 20th. And a week before that, on the 13th of September, you're going to have CPI data. So I think we're going to get a lot of message that they're going to be watching the data. CPI data is going to be quite key. The market is 50-50 at the moment, roughly, between whether we get a 50 basis points hike or 75 basis points hike. And the Fed, I think the messages that we get from Jackson Hole is going to be quite key in terms of driving whether your US dollar, the DXY, does that get into a 20-year high or not? And then the 10-year yield as well, as you guys have been talking about that, whether the 10-year yield, does it go up to test 3.5%? So there's a lot of things that the market, I think, is watching for. We've seen the US go up to the 200-day moving average, and it pulled back. And we had a very good Q2 earnings results behind us, but that's behind us now. So at the moment, it pulled back from a technical resistance level, and we're going to be watching the Jackson Hole for a lot of indicators. And in some sense, next month is important, but I think longer term, the question is, where are rates going to end up? What's the terminal rate going to be? Is it going to be the 3.5%, or is it much higher? And I think that's going to be the bigger driver for the markets over the next 12 months, if you look at where the rates end up. And Europe, as you say, yeah, I think there's a lot of risks in Europe. And, we have a core view ourselves of European equities. That means we expect Europe to trade in line with global equities. Well, that is our view for the next 12 months. And there's a lot of bad news out there. I think we agree. I think front and center of that, of course, is the gas prices and coming into winter and how that's going to affect things. But and then there seems to be a little bit of a harder move from Russia and in terms of the Nord Stream and the gas and the supply productions that they're cutting
Mr.
there.
Mr.
But
Yap,
we think a lot of that is being in the price actually.
Sure,
Sorry?
sure. Okay, all of that in the price. Yeah, good morning. Let's just revisit the first point that you made on the move post the Jackson Hole on the dollar index and on the bond yields. If right now the market perhaps wants to believe that maybe 109, 110 is it for now for the dollar index. But if we have a bigger move, maybe in October onwards, then do you think the emerging markets will revisit their lows, or is it something that the market is now, has digested and is ready to move on?
Yeah, that is a very key driver you point out. Emerging market equities, as you know, is very much correlated to the dollar, and the strong dollar has been a bit of a headwind for emerging market equities and China. But I think we do have a view that the DXY could be going through a process of peaking. I think a few things need to fall in place. We need to see a peak in rate expectations, and as inflation comes off, I think that will, we're looking out on a 12-month view as well, and we see the DXY actually going through a peaking process and coming off that. It has been strong, and that's been a headwind for emerging market equities. And we do have a positive view, though, on China equities. We think in terms of putting aside the DXY and the headwind from there, the direction of policy in China is towards easing. We think we've seen the cut in rates over there, and the policy direction, they've talked about a 19-point package right now to stimulate the economy. We think the direction in China is moving towards, supporting the economy, supporting economic growth, and it has a lot of the negative news been priced in if you look at the valuations for China equities. So that's something that we see as a positive actually for emerging market side.
So that's interesting. Your base case is that the dollar index perhaps is peaking out, at least through the course of the year, and that has been the biggest headwinds for emerging markets. So once that is out of the way, do you think fresh money would come into markets like India? I know you mentioned that you like a market like China, but how is India placed in your emerging markets pecking order?
Yeah, we also see India outperforming Asia ex-Japan equities. So we have a preferred view for India equities. And, the view there, I think very much is driven by what we see as still a strong domestic economy. And I think we're seeing very strong earnings growth, double-digit earnings growth, I think, for the third consecutive year in India for the Nifty index. So, and that's much better than other places. In other places like China and Asia, it's looking at single digit, and it's been actually being downgraded, whereas in India, actually, it's been quite positive. So, across against that, of course, is always the valuation premium for India equities. It's trading at a premium to its other peers, and the premium is actually above the historical average. So that is a little bit of a headwind that we have to watch for. We have been talking a bit more about diversifying into your fixed income assets as well. But India equities itself, compared to Asia ex-Japan, is something that we do prefer because of the strong earnings growth and domestic economy.
Actually, the last word you said, the domestic economy, is it better to stick to domestic-facing stocks in a market like India, purely because of the challenges that are happening across the world? I mean, the global-facing companies that have an exposure to, say, Europe are getting hit very hard because of higher energy costs, freight costs, logistics, etc. So do you think it's better to look inwards in a market like India, domestic consumption, perhaps autos, banks, etc.?
Yeah, well, the view that we have is more on a large cap in India. We prefer the large caps to the mid and small cap. We think that's going to be a bit more beneficial in terms of the domestic macro strength. But also, being in a bit more of a volatile market situation, we think the large caps are the ones that we do prefer. And the other tilt that we have in India actually is towards the value-driven stocks. And that's another theme that we have globally as we see rates going up. That's actually beneficial, we think, for value. So, value did very well in 2020, 2021. This year has been a bit mixed, but we do see the strength of value stocks broadening out. And that is actually another theme that we prefer within India.
Okay, well, it was a pleasure speaking to you, Mr. Yap. Thanks a lot for joining in, and hope to speak to you very soon yet again. Well, that's a word coming in from Standard Chartered. They do say that perhaps the worst of the dollar rise is now behind us. That was a big headwind for emerging markets. And now that that's out of the way, they like emerging markets, especially markets like India. On that optimistic note, we'll take a quick break. On the other side, welcome back. We kickstart a brand new day and one in which the SGX Nifty for now is indicating that the start may be okay, now it's actually moved up about 90 odd points higher. So the US markets also had a strong run. Let's see. For our own markets, it's been 2 days where the market has been climbing from the lows. So whether the dips get bought again, whether we move much higher than we are. We're anyway holding on to the 20-day moving average. Our research team is here to give us a list of top 10 stocks. So Anuj, what are you looking at today?
Sonia, there's something happening in the tier 2 banks for the last many days now. There's quite a bit of buying, and I think that's the area perhaps you could focus on. IndusInd Bank, I think that's the one which sort of defended its 20-day moving average. So that could be one stock to focus on. City Union Bank, I think it's been the strongest among the tier 2 banks for last 1 month or so. So that's another stock that I'll keep on my radar. Keep in mind, most of these stocks are overbought, but right now there's a bit of a momentum here. Nimesh was the first to alert to us that there's perhaps a likely deal in Bharti Airtel where Singtel will sell its stake to Bharti Airtel's promoters. Nimesh, it's official now.
Yes, Anuj, it's official now. So late last night, there was an official release from Bharti Airtel indicating that Singtel is looking to sell or transfer 3.3% stake in Bharti Airtel to the Bharti promoters. And the deal size they've indicated is 2.2 billion Singapore dollars. Now, reverse calculation, it works out to close to around 650, 660 rupees per share of Bharti Airtel. Now, what will be interesting is how the deal gets executed. It cannot happen in the block window for sure because the discount is quite high. Given the statement that there's going to be a transfer and further equalization of stake within the two entities, which is Singtel and Bharti promoters, there could be off-market transaction as well. If it happens off-market, the entire overhang of supply will be out of the way. So execution will be important to track. I really don't know how this deal will be executed on screen or off screen. But in a very important development, Singtel has indicated that they're going to sell 3.3%. After this stake sale, Singtel will hold close to 10.5% stake in Bharti Airtel, and Bharti promoters' stake will go up to 39%. Both are classified as promoters, so there is a very high likely that because it's an interstate transfer, it can happen off-market as well. There are tax angles to that, but really execution will be important. But the big overhang seems to be out of the way with the fact that Singtel has indicated that they're going to sell 3.3% stake in Bharti Airtel in the next 90 days from now.
Right. Nimesh, what is driving this? I mean, there is equalization, further equalization, etc. But what is the motivation to do this, and how should one look at that from a structural point of view?
Well, Prashant, I was just chatting with some large clients and investors, and the overall feedback is look at the kind of transactions Singtel has done globally as well. They are reducing their stakes in various portfolios, and as a part of overall Singtel strategy to reduce stake in some of their other investments as well. As part of that strategy, they are selling some stake in Bharti as well. That's the overall feedback that I got on the rationale on why Singtel is looking to sell stake. The important part is, Prashant, here that the promoter entity, the Bharti promoters, are willing to buy this entire 3.3%. So it looks like there is going to be no supply in the market. It's going to be an interstate transfer between the two promoters. So on face of it, nothing changes. It's basically a shift from Singtel to the Bharti promoters. But the only reason, what I understand, is Singtel is sparing stake across the globe in their investment companies, and Bharti is part of it as well.
And I mean, the fact that Bharti promoters are buying this is would they have like a ROFR or something, Nimesh? Would you know?
No, I really don't know as to what the arrangement is. But again, the other feedback is the Bharti promoters were in the market to raise money because they will have to fund this, right? It's a 13,000 crore deal. It's not a small amount. So it looks like there is going to be some backing or fundraising from the promoters, and also the promoter entity owns stake in many of the listed companies in India. So there could be some bit of stake sell, to raise money for the promoter entity. But as far as Bharti Airtel is concerned, it's a transfer with one promoter entity to another promoter entity.
Yeah, in fact, Singtel came out with numbers as well yesterday, and there's some more monetization. It's not just Bharti stake that they're selling. There's another $1 billion asset recycling that CLSA believes could take place over the next 3 to 4 quarters for Singtel. But Nimesh, the other one that you're tracking is RBL Bank. Some massive inflow yesterday in the stock.
That's right, Anuj. So the stock is actually entered the FNO ban on the last day of the expiry, but there were huge volumes yesterday. There was an indication that one of the long only funds seems to be an active buyer, but now there is an official. I mean, the block deal data discloses that college pension fund has bought close to 45 lakh shares, which works out to close to 50 crores of worth of RBL Bank yesterday. Now, first time, after the entire crisis which came out in RBL, a big long only fund has entered, and they've bought 45 lakh shares. So there was high delivery, a bit of short covering as well in RBL Bank yesterday. I was just looking at what this fund does and how big is it. Globally, they manage assets under the total asset under management for this particular fund is over a $1 trillion. So it's a large fund. They manage a lot of assets globally, and they have an exposure in India as well. And this is a big name that has come in RBL Bank yesterday with that college pension fund buying close to 45 lakh shares. The average price is around 108, and the stock intraday went to 125 as well. So short covering as well as one big fund coming in is seen as positive for RBL Bank.
Actually, it's interesting, this also comes on the back of RBL Bank adding 2 eminent members to its board of directors. That happened last week, Gopal Jain and Dr. Sivakumar Gopalan. And then before that, RBL Bank's earnings were also not too bad. In Q1, their stress has reduced quite a bit. Their balance sheet is stabilizing. So a lot of positive news flow coming through. And now, as Nimesh pointed out, this news flow as well of, big funds putting in money. So that's perhaps one of the reasons, a couple of reasons why RBL Bank has been doing pretty well lately. Thanks, Nimesh, for that. Well, let's move on. Ekta is tracking the pharmaceutical space. Ekta, over to you.
Thanks for that. Well, I'll start with Lupin because, there were 2 developments which took place post-markets yesterday. Remember that Lupin was significantly lower in yesterday's trading session. So the first is that they've received US FDA approval for an inhaler drug, which is basically around $300 million in terms of size in the US. So the company is estimated to make around $10 to $15 million from the drug. So not that much of a big approval. The other piece of news is the company is going to acquire 2 brands from the diabetes space from Boehringer Ingelheim for around 26 million euros. These 2 brands are already being sold by Lupin under license in the Indian market. So it's not that big in terms of an earnings development. So I assume that the uncertainty with regards to Spiriva generic, which is now taking more precedence in the stock, is probably going to weigh on the stock in today's trading session as well. Eris Life, CNBC-TV18 has not verified this report independently, but they have indicated it to us in the past as well that the company is scouting for acquisitions as a part of strategy to diversify and grow. The company is looking to grow beyond the cardio diabetes space. They're looking at acquisitions in the vitamin space. Torrent Pharma too, this is an ET article as well, where CNBC-TV18 has not verified this report independently. The company is going to look to acquire the skincare focused company Curate.
Oops, I think we can't hear you, Ekta. So what we'll do is we'll try and come back to you. But I think we've got a lot of pharma stocks to track today. But let's also go across to Abhishek. Some more stocks that are in the news. Abhishek, over to you.
Well, Sonia, to begin with, PSP Projects has got an order worth about 247.35 crore from precast and government segments. So total order inflow in FY23 so far has been more than 1,340 crores for the company. And NPSC is the other company. Their subsidiary NHPC Renewables, has signed an MOU with Government of Rajasthan for development of a 10 megawatt ultra mega renewable energy power park. So this will be done either via EPC or developer mode by NHPC REL. These are the 2 stocks on radar. Back to you.
Okay, Abhishek, thanks for that. Let's go across to Sonal. She's watching out for some oil and gas stocks. Sonal?
Oh yes, oil is on the boil again at that $102 barrel per mark, and it happened overnight after a lot of volatility that crude prices they climbed up, and that happened because concerns were there that US will not consider additional concessions to Iran in the nuclear deal, and that's why that move that we saw on Brent at that $102 per barrel mark, WTI at $95.6 per barrel mark. Additionally, ONGC will also be in focus because PTI has reported that the company has relaunched its tender to sell gas from the KG basin at a price of $15 per MMBTU. They say that company is looking to capitalize the global surge in gas prices that we have been talking about, and bids are for the sale of 0.75 MSCM gas per day. So that is something that could be positive for the company, and these 2 stocks will be in focus today.
All right, thanks a lot for that. So a lot of stocks to talk about actually. But here's a quick recap in case you missed out on any. Stocks with positive news flow. There's Bharti Airtel, RBL Bank, ONGC, Oil India, HOEC, Eris Life Sciences, Torrent Pharma, PSP Projects and NHPC. While Lupin is the only stock with negative news flow this morning. Let's take a quick break. On the other side of the break, we'll connect with Dhananjay Sinha of Systematix for some fundamental stock analysis. We'll also connect with AK Singh of NHPC as the company has inked a pact to set up a solar equipment manufacturing facility and development of 10 gigawatts renewable energy park. Stay tuned.
Welcome back. We have Dhananjay Sinha now joining us. He's director at Systematix Group. Dhananjay, hi, good morning. Thanks a lot for joining us. The news of the morning is on Bharti Airtel. The promoters are buying stake from Singtel. It's a stock which has done well, has been a sort of an outperformer. But what would be your approach here?
So the thing is, we have been, this is a stock that we have been positive about for some time. I think the stock has been doing fairly well. I think there can be some reaction to this news, but I think that will be more short term. So if there is any correction, I would sort of buy into this.
Okay. Dhananjay, good morning. The other stock I wanted to ask you about was RBL Bank. It's had a big run. I mean, it's up 25% for the week. And, our colleague Nimesh was just telling us about how College Retirement Fund has bought about 45 lakh shares. Not just that, earnings have been improving. They've added some good names on their board as well. Is this a stock or is this a space that you would like to be in?
So generally, we have been underweight on banks, and with respect to RBL, the stock had actually corrected quite a bit. I think at the peak it was trading about 700 rupees. So there has been a big fall, almost like 85-90%. So at this juncture, generally there has been a upswing with respect to the banking stocks, and Bank Nifty has gone up by almost like 24%. I think the mid-cap banks are catching up. I would avoid, because I'm underweight on banks, I would avoid the name that you just mentioned. So, so it's an avoid. I would not really participate in this particular upswing that is happening. One doesn't know. This can be fairly volatile.
So, okay, fair enough. So maybe just a trading kind of a move. Sorry, Dhananjay, you're saying that you're underweight banks in general, not
Yes.
just this group.
Right.
Okay. That's a bit of a, an anti-consensus kind of view, right? I mean,
Yes.
most expect banks to be
Yes.
doing very well. Could you explain that? Why don't you like that space? Yeah.
Couple of things. So the thing is, the space has actually done very well last year. So there was almost like a 40-50% rally as far as the PSU banks are concerned. This year, the markets have been fairly checkered, and the Bank Nifty has actually swung from something like 40,000 plus to 32 something, and it's sprung back to 38 something at this juncture. We examine this is largely because there is a certain increase in the multiplier. If you look at the Bank Nifty, price to book has increased from 2.4 or 2.3 to 2.6, 2.7 levels. So it's kind of valuation rise. But if you look at the banking sector results, our thesis has been that banks will struggle with respect to their margins and business growth. We are seeing considerable amount of competition as far as corporate lending is concerned. Everybody is actually focusing a lot on retail lending, uncollateralized lending, credit cards, business banking, etc. So banks are finding it difficult to really increase the lending rates and in the yields on advances. Whereas you also see that the cost of fund is rising because the liquidity is actually drawing out. We know that the lab balance as percentage of deposit has fallen from 5.4% at the peak to 0.5%. So that's actually pushing up the deposit costs. So that margin pressure is happening despite rising interest rates. The general view is that typically banks should actually see higher margins, which is not happening. Third thing is that if you look at the asset quality matrix amongst large banks that we have seen in even smaller banks, there is a rise in slippages, which is considerable, despite the fact that there has been a continued decline in NPA ratio. So I think these are concerns that I have. So while the Bank Nifty has rallied along with the general surge in the market, which is more global, and it is largely multiple expansion that's been happening. So I would be cautious about it, and I would basically look at banks that can continue to benefit in the current scenario when the slowdown happens in the second half. So growth area, and it's a growth sector, and typically I'm expecting growth to slow down in the second half of the year. So banks will also find it challenging to grow the balance sheet, and also you already have a competitive pressure that is emanating across the board.
Okay, very interesting press release from NDTV. Remember there's a stake buy that Adani is doing now. Remember this, of course, the NDTV promoters are fighting this case, but there's a SEBI restriction on the promoters of NDTV to deal in their own securities. So they're saying that, Adani will need SEBI approval if they have to go through and buy this, because, this would mean, this is a promoter entity, and if to buy it, the 2-year period expires on November 26, 2022. So there's still going to be a lot that could happen here. Any views on this deal, Dhananjay, or on the media sector?
See, I don't have a view on the deal, so I would want to refrain as well. So I have not really studied it well, but generally, I would say media does well in a scenario that we are looking at. So if there is a kind of a slowdown that happens in the second half as we are looking at it, media generally does well. So the thing is, right now, what we are seeing is, especially with various consumption space, there is a considerable amount of improvement, especially in FMCG and auto space. We are expecting commodity prices to come off. So we have been overweight on consumer space. And typically when such things happen, margins expand, and consumer companies start allocating more towards A&P and advertisement, etc. So typically the media space, including the print media, benefits from such situation of a cycle. So I would say that I'm sort of constructive in that space.
Okay, all right. A lot is happening in the renewable energy space. I wanted your views on that. But before asking you about it, we also have a management joining in, which is in focus on the back of several new projects. That's NHPC. They have signed an MOU with the Rajasthan government for development of 10 gigawatts renewable energy parks in Rajasthan. The company has also signed an MOU with BEL to set up a large capacity solar equipment manufacturing facility. To discuss the investments that they'll be making and what kind of revenues they can generate, AK Singh, the Chairman and Managing Director at NHPC, joins us now to talk about that. Mr. Singh, good morning, and thank you for joining us on the channel. Can you tell us about this new solar equipment manufacturing facility that you will be setting up along with BHEL? What is the kind of investment that you will make, and by when will the facility be up and running? What are the timelines you're looking at?
Basically, it is not a BHEL, it is BEL, and
yes,
we have land.
I stand corrected.
So we have just signed MOU. Let us go for some manufacturing. The modality yet to be decided, but we are ready to invest in whatever they want. We doesn't have the problem with the money, but definitely we'll be doing it very soon.
Yes, I stand corrected. It's BEL that you're setting the solar equipment manufacturing facility with. What is the kind of capacity that you're looking at, and what are the investments that you'll be making from your end?
Actually, right now we have just met the MOU, and we'll discuss how much we can invest. Let us start with, say, amount-wise, 1,000 crore, not more than that. And out of 1,000 crore, our equity will use on our land, because the valuation of the land is almost 100 crores. Then whatever the money required to be put, but they will be the leader. We'll be a joint venture with the, not the leader in the company.
Right. Sorry. So just to get this straight, Mr. Singh, hi, good morning. You're saying NHPC will put in a maximum of 1,000 crores?
Not from NHPC side, we will start with 1,000 crore, and the equity part from our side will be definitely will be the not the lead partner. So will be equity having say 24% like this.
No, how much will you put in, sir? You said there is land worth 100 crores, which you contribute towards this.
So that yet to be decided. We have to just already not decided it. We'll decide and then go to what to do for that. But definitely we're going to do the manufacturing there.
Okay, so that's on the solar equipment facility. You're also signed an MOU with the Rajasthan government for development of a 10 gigawatt renewable energy park in Rajasthan. Can you tell us what is the incremental capital required for that project, and what are you looking at in terms of a timeline for completion?
Actually, Rajasthan, the discussion is going on last almost 6-8 months. And we have also acquired some land over there through the lease basis. We have already floated a tender for 600 megawatt, and it is under discussion with the state of Rajasthan for signing of the PPA. If it happens, then we'll award 600 megawatt, which already been tendered. Secondly, with the government of Rajasthan, about 10,000, it will go in phases as per the requirement. And modality there also, whether they want to come as a joint venture or they stand alone, both are open. And accordingly, we decide. The MOU has been signed yesterday only, under a lot of discussion in the past.
So what is the expected ROE that we can look forward to from this particular project?
Every year, our ROE in the solar, it will in the range of, say, 12-13% only, not more than that.
Okay, 12-13%. And this entire capex plan that you have, about 5,800 crores of capex for the full year FY23, how do you plan to fund that?
Actually, on our balance sheet, we can raise at least 10,000 crore. But we do the capex. At the present, we plan for 8,000 crore. And you know, one by one, our projects are coming. So going up to even 15,000 crore in a year for the capex, it doesn't any problem. And our balance sheet raise the loan. And we put the 30% equity. The capex is not at all issue for NHPC.
Just a couple of more questions. You know, one concern has been that the receivables for the company are still very high, almost 5,500 crores. Any plans to bring that down?
The seven is now the lowest in the history of NHPC. Now we have only 737 crore for the current bill only. And if you see for the more than 45 days, it is zero. We have some amount in the case of JNK, but with the policy of Ministry of Power, late power payment surcharge, they can put in EMIs. So already we have signed in 24 EMIs. First EMI of 50 crore has come to us. So now at present, we have the lowest ever pending receivable from the market.
Okay. All right, Mr. Singh, we'll leave it at that. Thanks a lot for joining us and, you know, taking us through the business as well as the way forward. Dhananjay, if you were listening into that conversation, any thoughts on NHPC? There's lots happening in the renewable energy space. Of course, it will take time, about a year or two, before some of these projects reach fruition. But from a stock market perspective, do you like this space?
No, so the thing is, you know, earlier I used to like this space. I think the thing is, as far as the stocks are concerned, you know, the stocks haven't really done much. It's a very capital-intensive business. It takes time, and there is competition as well in terms of rates, etc. So I think for that reason, you know, I haven't been venturing in this space for a long time. So I would generally avoid it, actually, from a market standpoint.
So, Dhananjay, what are you buying in this market right now after the recent rally?
So the thing is, you know, what we are basically looking at is the domestic consumption space, the durable space, and even autos. I would say, you know, these are things that have actually done very well. So we are generally overweight in that space. We have also increased weights in pharma because we think that there can be some kind of volatility, and there are certain value plays that we have identified, such as Zydus and Sanofi, etc. We also like Dr. Reddy. So we have sort of increased our weights there. You know, we have also increased weights in some of the utility companies such as NDTV, etc. So you know, so that's the general construct that we have as far as the portfolio is concerned. So yeah, that's how we are positioning ourselves.
Okay. Just a quick word on some of these names in the capital goods space, which have been doing exceptionally well lately, whether it's ABB India sitting at a fresh high, Siemens has been doing well, L&T too.
Yes.
What would your pick of the pack be there?
So here we are sort of looking at, you know, things that are, you know, more visible in terms of order book, etc. So we have BEL and we have Bharat Forge in the industrial space. So what we are basically, in terms of the analysis that we've done, we think that a large part of increase in order book, etc., has been driven by exports and export orders, the price realization, which is actually linked to commodity prices. So generally, we are seeing industrial and cap goods sector actually benefiting from there. I think that's been the story of the last 1.5 years. In the current year, I think there has been very high volatility as far as cap goods are concerned. If you look at the cap good index, actually decreased by almost like 25%, and it rebounded almost like 30%. So it's actually reaching nearly the all-time high, especially the manufacturing index. My sense is that we have to be careful over here, because if a lot of cap goods companies are benefiting from higher commodity prices, I think we are looking at lower, realization going forward, especially relating to metals, etc. So we are sort of cautious about the rally that has happened at this juncture. So it's kind of very valuation intensive, and we are seeing that globally also, because a lot of dependencies on exports. The PMIs globally for manufacturing sector has been falling. So we looked at something like 95% of PMIs across major economies actually decreasing in July, and roughly about 65% are in contraction mode. So I think we have to be careful in this kind of environment. And so we have to be really looking at companies that have strong visibility. The companies that I talked about have very strong presence across multiple things, including defense, e-vehicles, commercial vehicles, etc. So I think these are the stocks that we would like. I think if metal prices are also falling, there can be operating performance improvement in these two companies, PEL and Bharat Forge, that I mentioned.
Okay, thanks a lot. Thanks. We'll just do one thing. We'll take a quick commercial break. We'll come back to you, Dhananjay, in just a bit. For now, we have the pre-opening rates kicking in minutes from now. Mitesh Thakkar and Sudarshan Sukhani will be joining in for some technical.
Well, the SGX Nifty is indicating a gap up, and today's expiry day. So what could that mean for the market? Global cues are positive. We have Sudarshan Sukhani and Mitesh Thakkar joining us now. I want to compliment both of them, and I'll tell you why. Sudarshan, good morning to you first. Yesterday you made a point that it's not about the level trading. You want to see once the market consolidates and then buy, and you'll get a good trade. The market, for most part, it didn't look like it was obliging. Then at 2:30 we had that massive surge. So now tell us, does that mean that this is now firmly a buy on dips, buy on consolidation market, and what are the levels to watch out for now?
Yeah, good morning, Anuj, and thanks for all that. Yes, yesterday afternoon was a buying opportunity, because then the markets, after the surge, was closing at the highs of the day. So that gave us an inkling. So if you are long since yesterday, then the trade is to stay long today. We are likely to see a trend day today, because yesterday was also a very narrow range day. Narrow range day, breakout on the upside, the chances are throughout the day we could see a sustained uptrend. For those who want to enter today, and there are many people, that's okay. The trade is, look for a minor dip. You won't get big dips. Look for a minor dip to enter the trade on the long side, or a small consolidation to go long. A trend day could be very interesting. The same applies to the Bank Nifty. Be long in both indices today.
Both indices today. Mitesh, good morning. I think 2 or 3 days back, you made this point that the 20-day moving average, cover your shorts and go long. Now that trade has worked out, but for positional traders, how much more, and especially on the Bank Nifty, what would be your trade?
Good morning, Anuj. So I think, that is something which has been a question which I've been thinking about. I think on the upside, where do we stop? The initial feeling is that 17,800, 850 should be the zone where this upper end of this consolidation can possibly emerge. And therefore, on the Nifty, I think, around that level, you might see some kind of supply emerge. The Bank Nifty between the two indices is clearly the outperforming one. And 39,200 was the first target. I think we are very close to that. We might actually hit that in the opening. But 39,700 then becomes the next target. So I'm still not sure that the bigger uptrend has resumed. I still believe that this is a bounce back, and we'll still form some kind of a contracting range and then eventually break on the upside. But for the time being, we'll try to take profits closer to about 17,800, 825, 850 on the Nifty, and about 39,700 on the Bank Nifty.
Okay. How about individual stocks? Amitesh, hi, good morning. What are you looking at in terms of trades for the day, both on the buy and sell side?
Good morning, Sonia. I have all buy calls today. Ashok Leyland is the first name on the list. That's a buy with a stop at 146.5 for targets of 158. Bandhan Bank is a buy with a stop at 288 for targets of 310. Canfin Home Finance is a buy as well. Keep a stop at 623. Look for targets of 660. And Marico is the final name on the list. That's a buy with a stop at 514 for targets of 540.
Okay, and Sudarshan, what's your list looking like?
Yeah, but before that, Anuj, quickly, markets don't work on enthusiasm. And so please keep a stop loss. 100 points from your entry for the Nifty and 200 points from your entry for the Bank Nifty and trail them. Please don't forget that. AU Bank is a buying opportunity. The stock has been trading in a narrow range. Actually, it came in my list yesterday also. It's on the verge of breaking out to new 3-month highs. Buying the stock under 635. Coforge is the only short sell in my list. It's not a very comfortable chart. An intraday short is possible with a stop of 37.35. Bank of Baroda, another bank now. So the banks are clearly outperforming. Bank of Baroda is a buy. Yesterday was a narrow range day. We could see a thrust on the upside. Buy with a stop under 121. And Manappuram, which was in a protracted bear market, is now recovering from that bear market. A small dip has come about. That is a buy on dips opportunity with a stop under 100.
Okay, well, thanks a lot for that sane advice, Sudarshan. We have Ashish Chaturmurtha also joining in. He's the Director, Head Research at JM Financial Services. Ashish, good morning. Your thoughts on the market? It has been trending higher with some hiccups here and there. But on the index today, what are your thoughts and what are individual names you're looking at?
Hi, good morning. So I think broader markets are in a strong upward trajectory only, and after seeing a pause or some profit booking in the last 3-4 trading sessions, I think there's a good base which has been formed around 17,400 kind of trajectory. So I think this is just a retracement of the entire rally which we witnessed from 15,200 to close to 18,000 kind of trajectory. Now, keeping 17,400 as a base, I think we are inching again back towards 18,000 to 18,100 kind of trajectory. So we have a positive bias on the market, and I think Bank Nifty is going to see a big upswing because the contribution which we are seeing in stocks like ICICI, Axis, State Bank of India, or even slight contribution coming from HDFC Bank and Kotak Bank can lead Bank Nifty towards 40,500 to 41,000 kind of trajectory. So that will be a big contributor to index rally. In terms of individual picks, I think my top pick would be ICICI Bank, where we have seen a very strong Y build-up as well as long accumulation is happening in the stock. So keeping 860 as a trading stop loss, I'm expecting the stock to hit 910 kind of levels in a shorter term. Positionally, we believe stock is poised for 1,000 kind of trajectory next couple of months, but immediate short term 910 is my short term target. The entire auto basket is looking very promising, and Maruti is my top pick in this entire basket. The stock has seen some profit booking, but I think now 8550, 8500 is going to be a key support zone for the stock. So keeping 8550 as an trading stop loss, one can initiate a long in Maruti. On upside, 9100 would be my short term target in Maruti. In the agrochemical space, we like PI Industries. We have been we think that the stock is poised for a 21% kind of CAGR growth in terms of revenue in the next 3-year period. And the kind of capex intensity companies speaking, I think there's going to be a lot of capex driven growth which the stock is going to witness. And that same is getting reflected into the medium to long term charts of PI Industries, where we have seen a big breakout on the monthly charts. So here one can initiate a long, keep 3,300 as an trading stop loss. On upside, 3,600 would be my short-term target in PI Industries. And last but not the least is Siemens. So I think the entire capital goods and engineering goods space is in a buzz. We have been speaking about Siemens, ABB, L&T, and Cummins. So I think today's data clearly indicates Siemens is poised for a good up move towards 3,050 to 3,100 kind of trajectory. So here one can initiate a long, keep 2840 as a trading stop loss. Short-term target would be 3,050 to 3,100 levels.
Okay, thanks Ashish for that. We'll take a quick break on that note. We'll come back with the pre-opening rates. Later, we'll also connect with Sameer Bhise of JM Financial Institutional Securities to discuss